Hey, so welcome back. It's February 1st, 2021. This will be week 6 of DeFi Class by Zapper. So today we are going to talk about how to get started trading in DeFi. So there's a number of steps here I want to walk you through. The idea of this class came from the times we are living in. There is a lot of surging interest in crypto, and I think crypto trading is best defined by what we do in DeFi, where you are 100% in control of your assets and you interact directly with these DeFi protocols. So we're going to walk through the different steps required in order to get fiat into the system, into a stable coin. And then we'll talk a bit more about how you would actually trade with Dex Aggregators. Before we get started on that, let me go ahead and just share the agenda here. So give me just a sec here. Actually, I'm going to just go ahead and retweet the link to this in case anybody wants to watch this. So there's that. Thanks for your patience. That's all sent out. And here we go. All right, so here's what we'll cover today. So first off, we're going to talk about why to choose DeFi over CeFi. Then we'll talk about how to on-ramp fiat to crypto. We'll talk about how to track your DeFi portfolio, how to trade with DEXs or Dex Aggregators, and then what are the risks involved. All right, so we'll do a lot of screen sharing here. If you have questions, if you go to tv.zapper.fi, or if you just hop into the live stream here, you'll be able to ask questions. So don't be afraid to ask questions along the way. I will try to pause in between topics so that we can try to answer your questions while we're still live. All right, so let's see here. So first off, let's talk about why to choose DeFi over CeFi. And I'm going to go ahead and share a few slides. So here we go. Just share here. There we go. All right. So just want to make a few more obvious points for those of us that have been trading in DeFi for longer, for those of us that have participated in decentralized finance, because there's a lot of people that have realized over the last few days what it means to not be in control of your assets, what it means to trust a centralized platform like Robinhood. I don't mean to paint any of the centralized finance players as being malicious or evil in any way, but I think this has been a great opportunity to really highlight, why we choose DeFi. So first off, for privacy reasons, you don't have to sign up and give up any sort of personal information like email, name, address, phone number, the usual stuff that goes with what's referred to as KYC or Know Your Customer. That's all a part of signing up for a centralized exchange like Binance or Coinbase, or using custodial lending like BlockFi. In DeFi, all you need is an Ethereum wallet. Then there's the fact that you have access globally. So as long as you have an internet, internet access, and as long as you can set up an Ethereum wallet, you should be able to access nearly all of the applications that are common in DeFi. You are 100% in control of your assets. So this is definitely a part of participating in DeFi that eliminates some potential users. If I prefer to not be 100% in control of my assets, DeFi might not be right for me just yet. But the silver lining to this is what everyone's seen over the past week, which is you can be locked out of an account. You can be prevented from trading stocks on Robinhood. But in DeFi, there's no faucet to turn off like that. There's no way for someone to shut me out. I have 24/7, 365 access to trading. I don't know if you've ever considered this if you're new to DeFi, but you only have access 9 to 5, normally weekdays. Even if you have access to something like Robinhood, you still don't have the ability to actually see a trade settle in real time. And that's why all of us get excited with decentralized finance. There's no middlemen to cut us off from that. And then another opportunity with DeFi is just access to long tail crypto assets. So there's a lot of new assets that are not available in centralized finance applications. So, even if you're on Coinbase, which I have a lot of respect for Coinbase, Binance, these major centralized exchanges that have really helped to usher in greater adoption in crypto. There's also a lot of assets there that they just won't list because there's no liquidity or there's not enough liquidity for them yet. But in DeFi, you have access to basically whatever you want because it's permissionless trading, meaning there is no permission to ask for as long as you can connect to your Ethereum wallet. All right, so let's pause there a second, see if there's any questions. All right, just a thumbs up from someone. All right. So let's talk about how to on-ramp fiat to crypto. So this is going to assume that you already have an account with an exchange like, let's say, Coinbase. Depending on what part of the world you're in, you'll have different centralized exchanges. There's really no way around this. I would recommend that folks check out wallets like Argent, who works with fiat on-ramp partners like Wire, W-Y-R-E. But we're just going to assume here that you either have access to a centralized exchange like Coinbase or that you're going to sign up for something like that. This is what's required to get fiat into a crypto asset so that you can start using everything that's available on Ethereum. So let me go ahead and reshare my screen here. Here we go. All right, here we go. So I'm going to show you how to on-ramp fiat to stablecoins. And so that starts with, if you start with something like a Coinbase, these are all going to be screenshots just because I wanted to maintain some privacy to what is or isn't in my own account. So if you're into Coinbase already, I would recommend check out pro.coinbase.com. I just like the interface for depositing fiat or withdrawing. It's a little bit easier to use. You are going to look in the upper right-hand corner. Actually, I take that back. It'll be in the left-hand corner. There's a deposit option, and then you can choose any asset. In this case, we're talking about getting fiat into the system. So I chose deposit USD, specify how much, and then you'll walk through a few clicks to actually deposit it. It requires that you put in a bank account or something like a debit card. So anyways, go about that. It's really easy to do. It will take, though, about 5 days. So it's going to take you about 5 business days to see that actually hit your account. So this is just an example of the confirmation page. Once your fiat has hit the system, once it's deposited, you'll see it update here. So in this case, I only have 23 cents in this account, and I would have US dollars. There's an ERC20 token called USD coin. There's lots of other stable coins like DAI and SUSD and Tether, but I will say if you have access to Coinbase, it's really easy for one to convert 1-to-1 between the US dollar and USDC. It's why I think USDC has become a very popular stable coin. So anyways, I just click on convert to USDC. So that'll then take me to a screen like this, and you would just choose however much of your US dollar you'd like to convert to the USDC coin. So this then is now, it's referred to as an ERC20 token. It means it's a token that is powered by Ethereum. So now I have a representation of the dollar, essentially a digital dollar, and I have the ability then to withdraw that. So I'm in my Coinbase account still. I'm going to click withdraw. It's going to give me an option of assets that they have trading on Coinbase. I'm choosing USDC, which has this little logo here. Oops. So that little blue logo there. Take your time when you're going through these steps. I think it's really important to remember once you're making a withdraw, you want to be careful that you're withdrawing to the correct address and that you're choosing the right token. Because at the end of the day, Coinbase trades other tokens that are not Ethereum powered. And so I would never withdraw Bitcoin to an Ethereum address. this USDC is an ERC20 token. So it makes it possible for me to send it to an Ethereum wallet. Once I click that, then I would choose the crypto address here. So this is, I'm able then to choose a crypto address as the option I'm going to withdraw through. And then here is where I can choose, here's where I would actually paste in the wallet address. So what I've done is gone to my MetaMask. So this also assumes that you know how to use MetaMask already. I'll link a video to that by Chris Bleck. I thought he did a great job about a year ago showing how to set up MetaMask and all the risks involved. But since MetaMask is my Web3 or Ethereum wallet, and in this case, I've got an Ethereum naming service address set up. Here is the 0x wallet address I needed to copy. I copy that and I paste it into where am I withdrawing my USDC to. And then after that, actually, that's it. That's the final step there. So there's a few other clicks in there. I won't bother talking through those, but it's a very intuitive flow that Coinbase has set up. So that's it. So what have I done? I've deposited US dollars. I've converted them to an ERC20 token called USD coin, USDC. Then I'm withdrawing the USDC to an Ethereum wallet. Because if you're new, Ethereum doesn't just power ETH, the native token of the Ethereum network. It also powers these ERC20 tokens, which are related to other applications or protocols on Ethereum. So here's some of the risks just to be aware of as you do this. You never withdraw a non-ETH or non-ERC20 token to an Ethereum wallet. So if you go exploring, I just want to clarify, like you would never send Bitcoin to an Ethereum wallet. Wrapped Bitcoin is an ERC20 token, so I could do it. And again, just take your time with these steps, or go on to Twitter, ask questions, or hop into the Zapper Discord. We're happy to help answer some of these, more basic beginner questions. When you copy and paste the address, make sure you double check the first few letters and numbers and the end of the address. It would be awesome if you could check the whole address, but I will say probabilistically, if you've copied and pasted and you see the first few letters, the first 4 or 5 and the last 4 or 5, it's very likely that you have the address properly pasted or properly copied and pasted. Then if you're transferring from an Ethereum wallet to Coinbase, so this is going the opposite direction. Let's pretend that I've already been trading in DeFi and now I'm coming back to something like a Coinbase where I want to deposit USDC and then I want to exchange it for US dollars before withdrawing to my bank account, or whatever fiat you use in whatever part of the world. You want to make sure that if you ever go backwards in this process, that you are conscious of the fact that centralized exchanges have different addresses normally for all different tokens, even if they're on Ethereum. So I would never send my USDC to an Ethereum deposit wallet address on Coinbase. Be very, very, very careful of that. It's a common issue that comes up. In some rare cases, those exchanges are able to recover it, but it's not just a matter of will they, it's in some cases it's can they, and that's a good way to lose a lot of money. So never ever send anything back to Coinbase or Gemini or any other centralized exchange unless you are depositing the exact type of token, Aave, ETH, DAI, USDC. All right, and then the last thing, no one can save you from sending or withdrawing from a centralized exchange like Coinbase to the wrong address. If you put in the wrong address, and even if it's a valid Ethereum address, because Coinbase and others like Gemini, they'll try to warn you if it's not a real address, if maybe you've misspelled it by one letter. But if you've put in an address that is real, you could be sending or withdrawing to an address you don't have control over. And there's no recourse after that. So treat your crypto like cash. If you lose it, it's gone forever. Very, very important. We understand that. All right, let's see if there's any other questions. what do you think of leverage? I'll just quickly say leverage, which is it's spelled like this. That is a DEX that's built on layer 2 on Ethereum. So it means you can trade at really you can trade like you're on a centralized exchange. So it's very fast in terms of transactions per second, and it should cost you I think like a penny or maybe even less per trade. So, you know, it's one of the benefits of using what's called a layer 2 DEX. And there's others like Loopring, DYDX will eventually be on one. We'll see Curve on layer 2. Synthetics just launched phase 0 of a 5-step process to getting onto layer 2. So, okay, cool. That's all the questions there. All right, so next up, we're going to cover how to track your DeFi portfolio. So let's assume that I have now sent my money to my wallet, and so my wallet now has this USDC coin, this stable coin on Ethereum. I can then track my whole portfolio. So let me just pull this up on Zapper. So this is what we do at Zapper. So this is really easy to talk about. Let's go ahead and share my portfolio. All right. So here's an example. If you go to zapper.fi, you actually can punch in DeFi snap.eth. This is like a demo wallet that we use. So this hopefully can be helpful to give you an idea of what like a live portfolio looks like. What's magical about this in comparison to centralized finance is that you're looking at all these different applications, or what we call platforms here. So there's Uniswap, which is an automated market maker or a DEX. Aave is a borrowing and lending protocol and platform. Curve is a DEX for like assets or stable coins, or wrapped Bitcoin traded to synthetic Bitcoin. So all these applications are pulled into one view. So you can track your whole portfolio by just connecting your Ethereum wallet. You give up no sort of personal information. You don't have to sign up. It's just connect your wallet and go. And you can do that by clicking here, choosing MetaMask or whatever wallet you use. Maybe you use something like a Coinbase wallet, which is another self-custody wallet, something like Gnosis, something like Argent, something like Trust Wallet. Anyways, you can then connect your wallet, and you can connect multiple wallets if you want, and then you can see a breakdown of your assets here. So there's my wallet with tokens. Here are different assets that have been staked or deposited into different types of DeFi applications. So there's a lot of complexity that gets represented here, but the idea is now you can at least track where your money is in real time based on the changing market rates that are fluctuating in real time. All right. And then let's move on to the next topic here. Just want to switch that up. So let's talk about how to trade on Dex Aggregators. So I could have just said, let's talk about how to trade on DEXs, but trading on a DEX, like, let me take you back to this. Give me just a sec here. I need to log back into my MetaMask. All right, here we go. Let me just switch wallets here. There we go. Okay, so let's talk about, there's lots of options here, and I'm not just going to show you what we work on at Zapper, because there's lots of other options I think that you should be aware of. So let's go to my Zapper dashboard again. All right. So one piece of the puzzle was just tracking the portfolio. Now that I have the ability to track my assets in real time, see the value of them, in this case, I can look at this wallet. So this is a different wallet than I showed you a moment ago. There's SushiSwap, which is another DEX or automated market maker. And I can see here that I'm a liquidity provider, which we won't talk about today. But let's hop over to the exchange tab. So this is a Dex aggregator that is pulling from 20 plus sources of liquidity. So this is like a Google search for the best flight. Why would you go airline by airline looking for the best flight? Why would you go hotel by hotel looking for the best hotel rate? We use aggregators. That's what a Dex aggregator is, an aggregator of DEXs. So if I was going to put in, let's say 0.5 ETH, which is what's represented in my wallet. So you can see in my wallet, I have 0.77 Ether. And let's say I'm going to trade it for the 1-inch token. I can go ahead and see what is the rate here. This is based, again, on the rates that are coming to us in real time from these different liquidity sources. In this case, my trade would be routed through Uniswap. But let's say that I'm going to trade for wrapped Bitcoin, which is a 1-to-1 representation of Bitcoin on the Ethereum blockchain. So this is the same thing in terms of price exposure to holding Bitcoin, different than the native token Bitcoin. So let's say I put in 100 ETH. If I've got 100 ETH, I'm doing well. With 100 ETH that I'm trading for Bitcoin, you can see it breaks it down across different exchanges. So it's going to be 64% of the trade will run through 0x, 36% will run through the Kyber network. So this is one of the cool things about using this Dex aggregator is you see those different routes. So anyways, this is one interface that's conveniently there in your Zapper dashboard. So this way you don't have to reconnect to a different application or different tab or window. We're trying to give you convenience in Zapper. You can also, we're not going to talk about this today, but you can also become a liquidity provider. You can also explore all the different farming opportunities, which are ways to earn rewards, often for lending liquidity or providing liquidity. So let's talk about another Dex aggregator. So I'm going to fire off. There's 3 others I want to make you aware of. Here we go. 1-inch. All right. Hold on just a sec. Let me go ahead and make sure that I have my wallet connected here. There we go. Okay, let me pull my window back up here. Here we go. Okay, so here's 1-inch. This is a very popular Dex aggregator, and this is just another one to make you aware of. So let's do, what happens if I want to trade 1 Ether for 1 wrapped Bitcoin? Actually, let's double check here. Oh, there we go. Sorry, I'm not sure why that wasn't showing up there. But anyways, different Dex aggregator, a lot more controls here. I've got limit orders aside from just market orders. If you go into the settings here, you can play with this. They have slippage tolerance, which is something else that we'll do on Zapper Exchange. But anyways, long story short, this is another fantastic Dex aggregator. And you can see the routing here. So, if you do like a bigger order, you'll see like some really interesting routes. So in this case, what we're going, 67% of it is going to go from Ether to WETH, and then from wrapped Ether to wrapped Bitcoin through a private market maker. And then part of that is going through Kyber, and this will update continuously. So that's another one to check out. Paraswap, I want to show you really quickly. Here we go. So Paraswap is different, style in terms of what you just saw with 1-inch or Zapper Exchange, but Paraswap is another very powerful Dex aggregator. So you can check that out at paraswap.io. Same sort of thing. It's very simple. Just put in whatever asset you want to trade here. if you've got something like Tether, or let's say I've got that USDC coin we were talking about earlier, I can trade that then for any asset that is sourced through Paraswap. So there's that. That's paraswap.io. And then the last one, this is matcha.xyz. So this is the same API that powers Zapper exchange, except it's a different front end. So in other words, this was created by the 0x team. And so you're getting the same trading rates on Zapper exchange as what you'd get here because we're using their API. But this is another front end to check out. So if I go, let's say to ETH, I can check this out, and here I can put in a market or limit order. Let's say I want to trade 100 DAI for however much ETH that is. It'll give me what's the best rate I can get, and I can also set limit orders as well. All right, so that is a Dex aggregator. The last thing I want to talk through is just what are the risks. So in terms of the risks of trading with a Dex aggregator, it's pretty much the same sorts of risks you'll run into across the rest of DeFi. First off, you're interacting with their smart contracts. So you are exposed to smart contract risk, which just means that there could be a bug in their code. It's something that I would say has been mitigated quite a bit by lots of battle-tested code across these different Dex aggregators I just showed you. But that risk always exists. So just please be aware of that. There's nothing wrong with hopping into the Discord of any of these teams, including us at Zapper, and just asking for help, asking questions. The next thing you want to be aware of is if you are trading a pegged asset, something like a stable coin, something that is pegged to something else. So we have stable coins like USDC, Tether, DAI, synthetic USD. Then we have representations of Bitcoin on the Ethereum blockchain, like wrapped Bitcoin, synthetic Bitcoin, Ren Bitcoin, TBTC, trustless Bitcoin. All of these different representations, there's a risk of them depegging. They're very battle tested at this point, so it feels like that risk is, being mitigated more every day that we survive without any sort of catastrophic disaster. But worth knowing that. Another thing to be aware of is I showed you USDC earlier. There are some administrative controls that would allow USDC to blacklist addresses. So there is, in other words, I mean to call out there's some centralized risk there. And without misrepresenting what USDC or what I'm trying to remember the name of the team behind USDC. Geez, what's the name of the team behind USDC? Hold on a sec. Is it just Center? God, did I just forget that it's just Center? Anyways, Jeremy Allaire, it's his team. If you check that out, just be aware there's that centralized risk, which means that it's not as decentralized as other stable coins. There's also always been some concerns with the likes of Tether, which I won't speak on, but there have been concerns about whether or not the stable coins are backed one-to-one. Anyway, we're not going to talk about it, but it's something that you can do your own research on. And then let's see, the last bit there in terms of our risks are, God, I think we've just about covered it. Oh, slippage. That's right. So let me open Zapper back up again. If you are unaware of what slippage is when you get quoted a rate and then you receive less or more. The price has essentially slipped. You've gotten more or less than what you were expecting. So when you go to trade, let's say I'm going to trade some Ether for Aave. Oops. There we go. Okay, so I would get, in this case, 22 Aave. I can set the slippage tolerance, and this is something that I believe is across all the DEX aggregators I just showed you. I normally set it for 1%. That's pretty standard. There's enough liquidity in a lot of DeFi now that if we're talking about major assets like Aave and Ether, 1%, 0.5%, I'm able to trade with that in most cases. But you can increase that slippage. What I wouldn't do is, if you're new to trading in DeFi, if an application, including our own Zapper exchange, if it ever tells you that you need to increase slippage, if you don't, again, fully understand what that means, and you're, let's say you're just playing with the numbers and you move it up to something like 10%, we hope you know what you're doing. Like, we're trying to warn you that, like, you could end up with a trade that is 10% worse than what you should be getting based on the market rate. So just be aware of that. Slippage tolerance is something you should set in all of the Dex aggregators or applications you use in DeFi. And you can see this is the maximum percentage you are willing to lose due to unfavorable price changes. All right. So that covers all the risks. I want to check and see what questions there are. Let's see. If you make a limit order, do you just need to make sure that your wallet is connected until the order goes through? No, you don't. You can submit a limit order. If you ever find a limit order, like I was showing Matcha, 1 inch, and let me double check if Paraswap has it. I can't tell whether Paraswap does. They might. But if you put in a limit order, once you take the steps to confirm that, it's basically like it's like a limit order on a centralized exchange. It's sitting there. If the token moves down to the price you want to buy or moves up to the price you want to sell, and yes, you can disconnect your wallet. I'll set a limit order and walk away from it for however long. One thing to be aware of: limit orders are, I believe there's still some challenges with it. So just having worked a bit with trying out Matcha and having tried out 1 inch, I wouldn't say it's as reliable as the market orders. So anyways, would love to get feedback though if folks are using limit orders more often. It's very important, I think, that we're able to do limit orders to get the best prices. Okay. I probably won't be able to help with this. Can you show an example of the best place to optimize staking link? But here's how I would go about it. So this is me like thinking on the fly about how I would go about it. All right, so let's go back to my Zapper dashboard. All right, so I'm going to click over to the Farm tab. The Farm tab in Zapper is where we aggregate. In this case, we've got about 230. There's 10 per page here. 230 farming opportunities. So I'm going to look up Link, and I can see that there's a Link ETH LP on SushiSwap, where I would be earning an estimated 14.18% annually or 0.27% weekly in sushi rewards. There's the Link DLP. I don't even know what that is. But in this case, I am earning with Dodo, and I'm earning an estimated 81.15%. So in most cases, if you find an opportunity here, you can flip over to the Pull tab, then look up Link DLP. In this case, that doesn't exist on here. So we don't have that Dodo opportunity yet. So I would go to Dodo's website and look up that opportunity. The other one, though, is there are all sorts of different link earning opportunities here. So these are liquidity provisions. So it's me being a market maker with Link and ETH on SushiSwap. There is me being a single-sided liquidity provider with Link and the Bancor token. So in this case, this is a special sort of liquidity provision where you can choose to add just one of the two tokens, and you're only exposed to that side of the liquidity provision. So I'll I'll try to link. There is an episode we did with Bancor that talks about single-sided liquidity provisions. This is very different than the way that other AMM liquidity provisions work. And that's just because it's actually really interesting and innovative because you're not exposed to the impermanent loss. All right, now that I've made people's heads explode with buzzwords, what are the best smart contract insurances to take out? So I'll just say that what's most battle tested, like what's been around since July 2019, that has, I think, about over 300 million in active cover is Nexus Mutual. There's a newer way to buy that cover. You can go through armor.fi. So that's pay-as-you-go insurance, which is very ideal for someone who doesn't want to commit to a minimum of 30 days of smart contract insurance. So, and that's all underwritten by the humongous capital pool that's at Nexus. So that's the most battle tested. A newer offering has been Cover Protocol. And then a newer offering beyond that is called Unslashed Finance. And then a newer offering beyond that that isn't live, I think it's on Coven, is called Ensure. So you can check any of those out. I actively use Nexus, so I might be a little biased, but that's the one that I tend to use. Let's see. All right, other than that, it looks like we've covered everything. Oh, yeah, great point. Someone mentioned in terms of risk. So what we covered today was, we were talking about, oops, where'd my cute little banner go? We were talking mainly about how to get started trading in DeFi. We've kind of trailed off into ways to farm, but the farming opportunities I showed at the end, just be aware that if one is a liquidity provider, there's the risk of impermanent loss, which means that, let's say I put in 50 Ether and DAI, I might walk away when I'm done being a liquidity provider with less Ether or less DAI, depending on which way those token prices move. If you want to learn more about impermanent loss, go to zapper.fi and click on the FAQ at the very bottom, and then just look up impermanent loss, permanent loss. There's a little video and article that I've written up about that. All right, well, I think we've covered everything. So thanks so much for tuning in. Hope this was helpful, and we will be back. Let's see, our next Yield TV interview will be this Wednesday. And just a reminder, every Monday around 12 or 1 p.m. Eastern, we do this DeFi class. And so this is where we try to cover basic to more advanced topics in DeFi. If you ever have suggestions, feel free to comment on our Twitter account at yield_TV. Also, don't forget to subscribe at tv.zapper.fi. If you follow at yield_TV, you'll see the live streams on Twitter. And then everything is available at tv.zapper.fi, all previous episodes, including these DeFi classes, which is different than some of the interview formats that we do. So anyways, thanks for watching, and everyone stay safe. And let me just take off my cute little banner. There we go. So yeah, everyone, thanks for tuning in, and we will see you on Wednesday. Bye.